Hey guys, it's CJ Investing here, back with another quick video. So I just want to talk about what I'm watching for the week as far as in the stock market. So I'm watching stocks like Adobe. I got my eye on Meta. First off, Adobe's been dang near cut in half. As you see, the price is at $299. I think at its highs, it was over, as you can see, it was almost $700. So it was down 3%, over 3% on Friday. You know, they don't really pay a dividend anymore. I guess they cut it a year or so ago. Earnings per share, they got $10. I guess that's per year. Price to earnings ratio, 29. So it's still a little high compared to some of the other tech stocks, but it's still pretty reasonable. As you can see, their fair valuation is $455.69, which is much higher than it is right now. And it seems like it's being downgraded. So Adobe was downgraded by Wells Fargo. It was downgraded by Edward Jones. Quite a bit of analysts cut their price targets on Adobe, but it's a growing business. As you can see, their earnings, they've been beating on earnings every quarter. And they already have high earnings as it is, high $2s, low $3, and it's growing. If you go back, high margins, 25.63% as the most recent quarter. They have pretty low debt. They have more cash than they do have debt. So that's what you always want to see. So I got Adobe on my watch list for the week, of course. I think that's getting pretty close to a bottom if it hasn't found one yet. And as well as Meta, I got it on my watch list. I got a little bit of interest in Meta. As you can see, it's at 146. It's come down quite a bit. It was at almost 400 at its highs, and it's trading very cheap right now. As you can see, the analysts estimate $252.18. It's like $100 over where it's at right now. It was down over 2% on Friday. As a market close, profit margin, great margins, 23.2%, and one of the lowest debt to capital ratios in the market at 11.71%, meaning they could pay off all of their debt in like less than a year with just their free cash flow. And that's very comparable to like Google, which is another one that I have on my watch list. But this business is basically pricing like it's going bankrupt or something, even though we're going to know it's going to take losses in the future because of the metaverse and they're getting everything built out. But it's going to be around for a long time. It's not going anywhere. And Mark Zuckerberg has taken the precaution as far as getting their balance sheet ready, which has been ready, but they've been further paying down debt, just, preparing for the transition. They might have higher debt in the future, but it's going to be nothing of what the other companies in the stock market have. They're always going to be a great business and very little debt on their balance sheet. So they have a strong balance sheet. So something to maybe add to your watch list as well. I like Apple, but Apple is trading a little expensive still. I mean, Apple is always going to be one of them expensive stocks. It's like over 2 trillion market cap. And I used to own it a long time ago, but it's been traded too high. And then they pay a very small dividend, I think of like 0.60%. And you have very little growth as far as the stock price. So I believe there's a such thing as a great company, which I believe Apple is, and just an okay stock, which I also think Apple is. So that has to come down quite a bit for me to have interest in them again. So I also have these on my watch list. If you watch my most recent video, you know I have it in my Roth IRA now. It's at 193. It's come down a little bit as well. It was down over 1% on Friday as the market closed. As you can see at the highs, it was at like 250 at its high. Now it's at 193. And I said when it goes on to 200, I was going to invest in it, which I did. And they have the estimate at 268.34. Visa is just one of them stable companies that's just going to be around for a very long time, and you can't convince me otherwise. Very strong profit margins, 43%, 50% profit margins, very little debt on the balance sheet, and they have growing earnings per share and a small dividend. But the difference between this and Apple is I believe this is going to grow more as far as the stock. The stock price is going to grow more. It's not extremely overvalued, in my opinion. I think it's like 100 or 200 billion market cap, if I'm not mistaken. But yeah, it's going to continue to grow. The price earning ratio is around 29, which is I think the same as Adobe's. So they trade around the same. I just prefer to invest in Visa because they also pay a small dividend as well. I'm a dividend investor, so I prefer that. So you get a little bit of both worlds in Visa, as well as Microsoft. That's one of the big dogs in the market, but it's trading at, let me see, it's trading at around the price and earnings ratio as Apple. I think it's like 25, 24, and it pays a little bit higher dividend than Apple. And I believe the stock price is going to grow more than Apple is. It's trading at in the high 1 trillions, mid to high 1 trillions. It's at $244.74 as of market close on Friday. It was down less than 1%. As you can see, the all-time highs was at close to like 350. So it's at 244. So it came down about $100. I think it could stand to come down a little bit more. I would love to buy this business under $1 trillion, even though I know that's a stretch. But I do think it is possible, the way which things can drop in the stock market that don't make any sense at all. They can make all type of price movements. And like Everything Money Said, which is a YouTube channel on YouTube, they were saying that things are more quickly to drop than they are to go up, which makes sense to me. So that's something I believe. I believe you will get some good prices as far as with some stocks that you love in the stock market. So you'll be surprised as long as you have patience and you're willing to wait and you have that price target in mind. So they value it at $337, 30 cents, about $100 from where it's at on the upside. They got low debt to equity, which is something I always look at. I always take into consideration. I don't consider a lot of companies that have more debt than they have equity or cash on their balance sheet. I just cross those out. We X those out. We don't look at those. They have high margins, of course. Microsoft, growing earnings. And like I said before, they pay a higher dividend than Apple and Visa. So I'm thinking about adding this back to my Roth IRA soon, but it has to drop quite a bit. I would prefer it to go under like 230 or 220 before I start to look back into investing into it. But I could maybe get into it sooner because I really like this company and I use their product as well, as far as like with LinkedIn, and I don't have an Xbox anymore or anything like that, but Microsoft 365, the necessities that people normally use. And I also really like Google. I've been talking about investing in Google for a long time, but I never got around to it. It's always been on my watch list. As you can see, it's even more undervalued than it was. It's at $102.80 as of market close on Friday. As you can see, the high for Google was around like 150. So it's come down quite a bit. It was undervalued compared to all the other FANG stocks. Always Google's been undervalued. And as you can see, the price to earnings ratio is under 20, which means that's like one of those golden ones. I think Meta stock was under 20 as well. So you got two really undervalued, great cash monsters, what I like to call them. Google got cash for days. They own YouTube, and they got all type of other products. They diversified, and one day I believe Google is going to pay a dividend before any of the other FANG stocks. That's just my opinion. And if Google paid a dividend, it would be, even if it was just a small dividend, it would be like the perfect stock to me. Because they make so much in cash, which I believe they're just trying to continue to grow their business, diversify into different things. And they have virtually no debt on their balance sheet, growing their earnings per share and everything. As you can see, total debt to capital 10.10%, which is nothing. Price to book 5, a little over 5. So they make so much revenue. Even I think their cash flow is excellent on Google. They got a lot of free cash flow. So they could pay a dividend in the future if they ever decide to, which I believe they will. But this is one to keep on your watch list. This is one that I'm keeping on mine. I'm hoping that it goes under $100, under $90, and I could even purchase it right now if I really wanted to. But I just have other things like Microsoft. I might buy a little bit more Visa that I'm looking at right now. But yeah, that's just it for today. I just want to do this quick video of the stocks that I kind of have on my watch list on my sites for the week. I don't know when this video is going to drop, if it's going to drop today on Monday, which I'm recording it, or it's going to drop tomorrow, which is Tuesday. But one of those days I'm going to get it out. But I appreciate y'all for tuning in. Thank y'all for always supporting, showing love. Make sure to drop a like if you enjoyed the video. If you like stuff like this, me giving my opinion, just like a laid back type of video, and just sharing my thoughts. And I would love to hear y'all thoughts as well, so we can have like conversations or something in the comment section below. But subscribe for more so we could grow the family. Come join the family. We're a growing family, small channel, but growing family. And I'll see y'all next time. Love y'all. Peace.